Life insurance. It's a topic many avoid, but it's crucial for financial security. Life insurance provides a safety net for your loved ones if something happens to you. It offers financial protection, covering expenses and ensuring their well-being. Think of it as a promise. You pay a premium, and the insurance company pays a death benefit to your beneficiaries upon your passing. This money can cover various needs, like mortgage payments, education expenses, or daily living costs. Life insurance is not about getting rich. It's about protecting your family's future. It ensures they can maintain their lifestyle and achieve their goals even without you. It's a powerful tool for peace of mind. Whether you're single, married, or have a family, life insurance is worth considering. It's about taking responsibility and securing your loved one's financial future. Term life insurance is straightforward. It provides coverage for a specific period, typically 10, 20, or 30 years. Think of it as renting coverage for a set time. Key features include affordability and simplicity. Premiums are generally lower compared to permanent life insurance, making it an attractive option for budget-conscious individuals. The main advantage is its cost-effectiveness. It offers substantial coverage at a lower price, especially for younger individuals. It's an ideal choice for covering temporary needs like a mortgage or young children. However, term life insurance has limitations. Coverage is temporary and premiums increase upon renewal. Once the term ends, you have no coverage unless you renew at a higher rate. Permanent life insurance, unlike term life, offers lifelong coverage. As long as you pay your premiums, your beneficiaries will receive a death benefit. It also includes a cash value component, which grows over time. One key feature is the accumulation of cash value. A portion of your premium goes towards this account, which earns interest and can be borrowed against or withdrawn later. The main advantage is lifetime protection and the potential for cash value growth. It can serve as a savings tool and provide financial flexibility. However, permanent life insurance is more expensive than term life. Its complexity requires careful consideration and understanding of its investment component. Whole life insurance is a type of permanent life insurance with guaranteed premiums and death benefits. It provides predictable, lifelong coverage. Its key feature is the guaranteed cash value growth. Your cash value accumulates at a fixed rate, providing a safe and predictable savings component. The main advantage is its stability and guaranteed growth. It offers peace of mind knowing your premiums and death benefit are locked in. However, whole life insurance is less flexible than other options. Its fixed nature may not align with changing financial needs or investment goals. Universal life insurance offers flexibility. It allows you to adjust your premiums and death benefit within certain limits, adapting to your changing needs. Its key feature is adjustable premiums and death benefits. You can increase or decrease payments and coverage as your circumstances change. The main advantage is its adaptability. It provides flexibility for individuals with fluctuating incomes or evolving financial goals. However, universal life insurance's flexibility comes with complexity. Managing its adjustable features requires careful monitoring and understanding of its mechanics. Variable life insurance combines life insurance with investment options. It allows you to allocate your cash value to different investment accounts, aiming for higher returns. Its key feature is the potential for higher returns. By investing in market-linked funds, you can potentially grow your cash value faster. The main advantage is the opportunity for investment growth. It appeals to individuals seeking to potentially outpace inflation and accumulate wealth. However, variable life insurance carries investment risk. Market fluctuations can impact your cash value and returns are not guaranteed. Here is a short script on Index Universal Life Insurance. Index Universal Life Narrator. Are you looking for a life insurance policy that offers flexibility and potential for tax-deferred growth? Consider Index Universal Life Insurance. Scene 2. How it works. Narrator. Index Universal Life Insurance combines a death benefit with a cash value component that earns interest based on the performance of a specific stock market index, such as the S&P 500. Scene 3. Key benefits. Narrator. The benefits include flexible premiums and death benefit, potential for tax-deferred growth, downside protection with a guaranteed minimum interest rate, ability to take loans or withdrawals from the cash value. Narrator. For example, let's say you purchase an Index Universal Life Insurance policy with a $100,000 death benefit, living benefits, and a cash value that earns interest based on the S&P 500. If the index performs well, your cash value could grow significantly over time. Narrator: Index Universal Life Insurance offers a unique combination of protection and potential for growth. Consult with a licensed insurance professional to determine if it's the right fit for your financial goals and situation. Final expense insurance, also known as burial insurance, is a smaller policy designed to cover end-of-life expenses. It provides a payout to beneficiaries for funeral costs, medical bills, and other final expenses. Its key feature is affordability and ease of qualification. It typically requires no medical exam and offers smaller coverage amounts, making it accessible for seniors. The main advantage is its simplicity and affordability. It provides peace of mind knowing your loved ones won't face financial burdens during a difficult time. However, final expense insurance has limitations. Its coverage is limited to end-of-life expenses and may not be suitable for broader financial needs. Group life insurance is offered through employers or organizations. It provides coverage to a group of people under a single policy, often at lower rates. Its key feature is convenience and affordability. Employers often subsidize premiums, making it a cost-effective option for employees. The main advantage is its accessibility and potential cost savings. It provides basic life insurance coverage without requiring individual underwriting. However, group life insurance has limitations. Coverage is typically tied to employment, and leaving your job may result in losing your coverage. Navigating the world of life insurance can feel overwhelming, but it doesn't have to be. By understanding your needs and seeking expert advice, you can make informed decisions for your future. Start by assessing your financial situation, goals, and dependents. Determine the coverage amount needed to protect your loved ones and their future. Consider your budget and risk tolerance. Term life insurance offers affordability, while permanent options provide lifetime coverage and investment components. Don't hesitate to consult with a qualified insurance professional. They can provide personalized guidance, compare policies, and help you choose the right coverage. Remember, life insurance is not a one-size-fits-all solution. Carefully consider your options, seek expert advice, and choose a policy that aligns with your individual needs and financial goals.